Alright, what's going on, family? This is Shaheen, and I've been dying to make this video for you guys. I'm so excited that it's finally coming out. Basically, if you've known me for a while, or if you've been in my group for a while, then you know that aside from day trading options, that I actually play poker for some nice side income. I'll play, like every other day, a couple times a week for multiple hours to make some nice income. And what I've noticed is there's a big correlation between great day traders and options traders and great professional poker players. Both have to deal with risk management and making decisions when, in poker, for example, you don't know what the other person has. And in trading, for example, you have to make decisions when you don't necessarily know exactly what's going to happen. So in this video, we're going to be exploring what great poker players, how they play, and how we can use that to actually improve our own trading. Now, just to preface, I'm not going to be going over all the rules of poker in this video. I expect you to have, a basic knowledge of the game. If you don't know anything about poker and you want to learn a little bit about it, I encourage you to just look up a YouTube video about it or just read the rules online. But moving on. Alright, so what you're looking at here is what's called a pre-flop range. So basically, for the past couple of years, computers have completely dominated poker, very similarly to the way they've dominated chess in the 21st century. And nowadays, poker players play a lot differently than they would, say, 20 years ago before the influence of computers. Same way how, chess players play completely differently now than they would have 40, 30 years ago. And basically, what you'll notice about today's professional poker players is they're going to be folding like 80 to 90% of the hands they get before even seeing the flop. Flop being, the first three cards placed for the whole table. And so this picture helps demonstrate that. Basically, under the gun here, where it says UTG, stands for under the gun, and that describes a position on the table that the player, whoever it is, it could be you, this player, is in. They're under the gun. And this is a very undesirable position because you will be one of the first players to act after the flop comes. Generally, being one of the last players to make a decision is best because you can see what everyone else does before you. And when you're out of position, like under the gun, you don't have any of those advantages. And so this is a range of hands that the under the gun player should look to add more money to the pot with. Basically, it's the top tier hands. You have ace 10, ace jack, ace queen, some high pocket pairs like queens, jacks, 10s, 9s, 8s, etc. And all these others that are white, they should generally get rid of, or they should call very lightly. This is the type of strategy you'll see a lot of professionals play with, and that's how they make their income from poker. So you can see they're folding majority of these hands. And so being under the gun, I relate it being very similar to being in a choppy market environment. In all these possible hands, all of these, this entire range, are possible trades to be taken. And these green squares are showing us that in these unfavorable market environments, the only hands you should be playing and the only trades you should be taking are hands with a lot of chances to win, like these very high cards or these pocket pairs. And the trades you should be taking are trades that have a lot of catalysts or just A+ trades in general. These hands that look really good represent the possible trades that look really good, like a wedge breakdown with maybe a couple of other catalysts. But when the market is really gross and choppy, you're not going to take those trades with maybe a lot of with less catalyst than you would with your A++ trades. And so these charts are very similar to our trading playbooks. Basically a list of the top tier possible trades you could take, the ones you're going to take 10 out of 10 times. And so far you can already tell a lot of the similarities between a great trader and a great player at the poker table. Managing your risk, taking only the best hands or the best trades in the most unfavorable conditions, very similar to a choppy market environment. All right, moving on. This is an example of a pre-flop range for a person in position with a better position than this under the gun player. So this is a person in position, which means after the flop, they'll be last to make a decision on what they want to do. And this is generally, like I said, a very favorable position to be in. And so for that reason, you can see there's a lot more a lot more hands to be putting in money with. So for example, green is call. You're going to be putting in money with all these greens. Red, you're going to bet a little bit more. You're going to add more money to the pot. And so that's all these really nice hands. And then you have blue, which you're going to fold, which still are a majority, or not necessarily a majority, but there's a lot of these hands that professional poker players need to have discipline, just like traders need to have discipline, to simply throw away whenever their trade setup just isn't necessarily A+. And so what I like thinking about this is, you see green are call, so and red are 3-bet, which means you're going to raise and put in more money. So once again, these red hands, aces, kings, ace, king, king, queen, these very strong hands, sevens, 7-6 of the same suit, another very strong hand. These represent, our A++ trades that have a lot of catalysts, a lot of reasons to work. These are all hands that, have a lot of chances to win the entire pot in poker. But then you get to these green, these call hands that you're still going to be putting in money, but you're not going to be putting in as much as you would with your top tier hands. And so these I relate to my accept zero trades that I'm going to accept the full risk on, that I'm fine if it goes to zero because I'm sizing down. I'm still putting in money, but I'm not, in poker, I'm not going to raise, and in trading, I'm not going to be putting in my full size. And so this represents, a very favorable market condition as well. You have to remember, this under the gun player represents a market condition that's very choppy, not much momentum in either direction, a lot of fake outs. And then this represents the opposite, markets that trend very well, markets that break out or break down of levels very well. And so you have a lot of opportunities. If you find trading opportunities that are fairly decent, maybe you can throw on some lottos. And that's why I accept zero and all of these. That's what these green call hands represent. But once again, majority of the time, you have a premium hand or a premium trading opportunity, an A++ trade in a very favorable market condition. You're going to want to raise, in trading, you're going to want to size up. All right, and these were all ways poker players are very similar to day traders in terms of how they manage risk, how they manage their discipline, not taking a lot of trades that might look kind of good, like Queen 8, it's a semi-decent hand, but they're having the discipline. This would be an example of, like a B trade in the market. They're having the discipline to let it go and fold it. Now, what we're going to do is move on to an actual hand example, like an actual poker hand example, and how it relates to how traders have to make decisions without knowing exactly what's going to happen in the market. So let's move on. This is the hand we are given. So we're given two aces. This is the best starting hand in poker. You know, you're always going to want to raise this hand. Let's imagine we get this hand, we raise it, and we get one caller. Okay, and we go to a flop. This is the flop. We have 9, 7, ace, and 3 diamonds. Okay, it's a semi-sketchy flop because of the fact that there are 2 diamonds and we don't have any diamonds in our hand. If one more diamond would come, then anyone with 1 diamond in their hand would beat us, even though we have 3 of the same card. If you take a look here, if you don't know much about poker, these are the hand rankings, which hands beat other hands. So as you can see, a flush, which is all of the same suit, will beat a 3 of a kind, which is what we currently have. So we're a little worried when the flop comes 3 diamonds. There's a potential that our opponent has 2 diamonds in their hand and they're already beating us, but we do have a couple outs. You know, we could, if they're already beating us now and they decide to bet and we call, and then another 7 appears, then we're actually beating them, because then we would have a full house, which is 3 of a kind and then 2 of a kind. But once again, it's still kind of sketchy, and let's imagine they bet a little bit and we call. This is, once again, something to be slightly worried about, because they're leading, they're betting into us, and once again, they're representing that they might have a strong hand, even though we have a pretty good hand, 3 of a kind. Now, this is very similar to a trader who finds an A+ setup in the market, maybe in a very favorable market condition as well, a market that trends very nicely, and we find a great opportunity to go long, for example. When the flop comes with these 3 diamonds, this is an example of a slight pullback in trading terms. You know, you're still in a long position and you get a slight pullback, not necessarily enough to take you out of a trade, you know, since you still have a fantastic hand, a fantastic trade to begin with, but it's something to be a little bit skeptical about. Now, let's imagine that the next card is the 6 of diamonds, and then our opponent leads out again and bets on us again. This is an example of, it's very similar to when that trade that is starting to, you know, go down on us starts to tank a little bit more and starts maybe breaking through some support levels we have or some of our momentum indicators. And this is an example of a hand that started out really well, 2 aces, best hand in poker, and it get very bad. Now any diamond beats us, and our only chance of beating any diamond, if there's a 6 right here, is if the board pairs and we get a 6, a 7, or a 9 on the last card, or an ace for quads. But the chances of that happening on the last card is very low. There's a good chance that we're already beaten, and the last card is most likely going to be a dud. And at this point, a professional poker player is going to let go of their aces. You know, it started out as an amazing hand, and then it slowly, in trading terms, you know, it slowly started pulling back on us, eventually breaking all of our levels, and a good trade turned bad. And that's an example of when a trader, you know, they don't necessarily, or a professional poker player doesn't necessarily know exactly what they have, but you can assume the risk to reward just isn't there to make a call there, since we're only drawing to a couple outs, the 7, the 9, and the ace, and the 6. So yeah, this is basically the video, what I wanted to introduce you guys the concept to. I encourage you guys, you know, to play some poker learn a little bit about it, watch the professionals play, because there are so many similarities to trading. But that being said, hope you guys have a great weekend. Mine has been fantastic already. But I'm also waiting for Monday. I'm hoping Monday comes pretty fast. I'm excited to trade with you guys. I will have another video on another completely different topic coming up tomorrow, hopefully. It'll be a really good video. And stay tuned, stay subscribed. Love you guys.